So I will introduce the speaker of the day, and her name is Irene Karuga. Irene is passionate about collaborations and believes that successful economies will be built through supporting MSMEs grow and scale to make them successful and sustainable. This will be achieved through working together to redesk them, as that has been the missing link. She has almost 2 decades of professional experience in financial services with over a decade in leasing business, including startup experience in 2 bank subsidiaries. She previously worked at former UAP Insurance, currently Old Mutual, NIC Bank Group, currently NCBA Bank Group, Jamii Bora Leasing, currently under Kingdom Bank Limited, and transitioned from C-suite role to entrepreneurship from a company owned by an investment group in Kenya. She is currently the founder and managing director of Leasing Limited, a financial inclusion company leveraging on equipment leasing to support MSMEs in access to productive capital assets for their operations. She has a Bachelor of Commerce marketing degree from the University of Nairobi, professional diploma in marketing from the Chartered Institute of Marketing UK, and an executive leadership certification for women directors leadership program from Strathmore Business School. She has participated in SME capacity building programs such as She Stars program, ABSA, Yunus, GIZ, 2023, Jay-Z 2023, Jamii Firms, Honoris, United Universities, Women in Africa, Coca-Cola Foundation 2023, Tuungane 2X, and is among the finalists in the Nkwazi Investment Readiness Program by Africa Enterprise Challenge Fund, AECF. She is also a member of Chief Executive Officers Associations and is involved in MSME community. I will go on and on. Karibu sana Miss Mrs. Irene Karuga.
Thank you for the introduction. Good morning, everybody. It's a privilege to join you this morning. I'll put on my video for a short moment, at least so that you're able to relate with me, but during my presentation, I'll put it off so that the presentation is stable. Thank you all for joining this morning. I know there's so much happening in this country and everybody is concerned. So today I'll spend a few minutes sharing about something innovative that we can use in our businesses to be able to leverage even the cash that we have. As much as it's limited right now, we can be able to leverage with it. So without much further ado, let me share my screen so that I can take us through the presentation. You can see my screen?
Yes, we can.
Okay. So I can just take us off with a quick introduction of the company I represent. So Leasing Limited is one of the players of the solution I'll be offering you today. We focus on B2B and we were incorporated in October 2022. And our focus is really on SME financial inclusion. An easy way of remembering our values, we say we are epic because integrity is key for us. We are passionate about what we do. We are not afraid of innovation, and we like doing things differently and challenging status quo. And best still, we collaborate. So at the heart of the matter, and I'm sure this is some of the statistics, the statistics I'm about to share with you are statistics we were able to see through a report from an organization called WILD, and also the central bank report about what are the things that people are seeking financing for. So from their research, we noticed that 96% of businesses require external financing. And I'm sure in this room, if anyone agrees with me, please put a hands up. At least that way I know that the statistics are not lying. And then we realized that 71% of this financing is actually required for working capital or asset acquisition. So when we have this need as big as this, one of the things that then it informs us is for us to be able to make a difference as people who offer financial solutions. We need first to understand what are the challenges people are facing. So some of the challenges I picked up, and if there's any that I miss out, feel free to add it in the chat, because when we understand what challenges there are, then we'll be able to see what solutions then will make sense. So the first challenge I know we encounter, and when I talk about capital investment, in this case, I want to narrow down my presentation on equipment, especially. I know as businesses, sometimes we invest in real estate, but for the benefit of this presentation, I want to narrow down on capital equipment that you require for your operations, and I'll elaborate throughout the presentation or some of the equipment that I'm referencing. So one of the challenges I know we encounter because we go to banks or other financial institutions is you may be asked for a high deposit contribution. I know that's one of the key challenges that we normally encounter when we seek financing. The other thing, and I'm sure many of us have experienced it, you go to the bank, you want to buy a piece of equipment and they ask you to give additional collateral, and more often than not, it's always land or a title or a logbook. But the question is, how many of us have those particular assets, and are they really tied to the business or are they personal assets? And the perception of specialized equipment. And today I'll also educate us what we mean by specialized equipment. So then we realize that there are so many ways in which we can be able to acquire equipment without thinking about the use. Then there are many times, there are a lot of financial solutions currently in the market, a lot of them being the digital loan solutions. But one of the key things we note about them, they're short-term in nature. So when we look at investing in equipment and you're dealing with short-term cycles, of course, it means then you'll have a strain on your cash flow. And more often than not, you may not have a budget for auxiliary solutions like software, or if let's say you're dealing with something like, let's say it's a printer, you may need the cartridges, and sometimes when you get financing, the financing does not give you all these auxiliaries. If there's any other needs, please put it in the chat. But for me, these are some of the things that I picked up that affect us when we are seeking financing. And today I'm about to share with you a solution that you can consider anytime you invest in your capital assets and how it can help you navigate some of the challenges you face. So today I'll be talking to us about leasing in a simplistic way. Anytime you talk about leasing, always look at it like it's the simplest way of explaining leasing is renting. It's whereby you enter into a solution that allows you to use an asset and then you're able to pay specifically for it. Today we rent premises and pay rent for it. Now in the context of leasing, and what I'm speaking about equipment leasing, is the same thing. As opposed to you buying an asset, you enter into a contractual agreement which you pay a specific, you enter into a contract for a specific term, you pay a specific amount to be able to use a specific asset. The reason why it is specific in terms of even the asset is because what is one of the things that is unique about a lease, the leasing company does not stock assets that they provide to you. The leasing company will actually procure the exact assets that you require for your operation. So that's why it's specific for you. Unlike the case of a building where the landlord will have built the premise, probably they'll allow you to do your own fit out. When it comes to equipment leasing, we actually procure what is specific to your needs. And that's one of the reasons why we say it's one of the avenues you can use to acquire equipment. So what are some of the key features that you can, when you talk about leasing, and why will it be a suitable avenue for you to be able to consider when you're acquiring your assets? The first thing it does is equipment leasing, as I mentioned, is specific for you. So today, if you want a laptop, we will not get you any laptop of any model. It will be exactly what will serve your operations. If you require production equipment, it will be specific to you. So you may ask, how is that done? More often than not, we work with leasing companies will actually work with suppliers to be able to assess what specific assets they have and whether they meet your requirements. More often than not, the term on a lease is usually more than 12 months, but below 12 months is usually done under a separate arrangement. So the solution that we call leasing is not a hire purchase. It's actually a lease arrangement. Whenever you want to do less than 12 months, we call it a hire. So most leasing companies tend not to do the short-term solution. So anytime you want to lease for less than 12 months, you're likely not to find that arrangement in a leasing company. And where it is available, that will not be called a lease, it will be called something different. The contractual arrangement that governs a lease is called a master lease agreement, and it stipulates the use of the asset. So it basically says, what are your obligations in leasing, we call you a lessee. What are your obligations for using the particular asset, and what are the obligations the leasing company has over you? The other thing that is unique about a leasing arrangement is the title of the asset. That means if it's, let's say, a motor vehicle, the logbook will be under the name of the leasing company. If it's any other asset, the invoice that will purchase that asset will be under the name of the leasing company. One question that I always throw to people, and the reason why this should be neutral for someone who wants assets, the question normally is, how do we make money? Is it through using the asset, or is it owning the asset? And maybe we can have a comment in the chat. How do we make money? Is it using or is it owning? Yeah? How do we
It's
make money?
using.
Exactly. So when it comes to using
Using.
an asset, yeah, so if we make money through using the asset and not owning an asset, that's why leasing is a good form of acquiring assets, because if it's the usage that actually makes you make money, whether you own the asset or not does not matter. And that is the reason why we say one of the solutions in which you can actually use to acquire your assets is leasing. And the solution that's specific in terms of the leasing company owning, the leasing company is called a lessor. It is called an operating lease because you use the asset, and at the end of the lease term, you return it to the leasing company for them to be able to dispose. But sometimes, but then what normally happens in an operating lease, and you may ask, how does someone pay for it? In an operating lease where the asset goes back to the leasing company at the end, you as the customer will not pay for the full cost of the use of the asset. We call it a partial payout lease, because at the end of the lease term, when the asset comes back to us, we call it a residual value, which we are able to sell or lease it to somebody else to recover our money. However, and especially this is more predominant with SMEs, sometimes you may actually want to lease an asset and you want to keep it at the end of the lease term because it has a longer economic useful life. And in this case, you're talking about maybe production machinery that can stay up to 10 years or even much longer. So more often than not, you may say, can I have an arrangement in which I keep the asset at the end of the lease? In this case, that particular arrangement is called a finance lease, where you have ownership retained at the end. However, the legal ownership is only transferred once you make the final payment. So that's the key differentiator. So there are two forms of lease, where you lease just to use, and there's a lease where you can lease to retain the ownership of the asset. In some cases, some people may ask for that, but in the true sense, when you lease, unless that machine is very unique to your business and you feel it will serve you longer, you'll see the main benefits that you get where you're able just to use the asset and return it at the end of the lease. And then the good thing about leasing, it's very interesting how leasing is structured. We have two forms of lease. We have what we call a dry lease. A dry lease is purely a lease where you just pay for the use of the asset and nothing else. But sometimes leasing can be structured to incorporate things like insurance. It can have service and maintenance. It can have even software embedded in the case where you need assets done that. And that's why we say leasing becomes a much broader scope in terms of you acquiring your assets, because we don't just look at assets as a standalone, we incorporate other things that can be able to support you. But maybe the question would be, what is the catch, especially when it comes to pricing? One thing I want to emphasize at this point, pricing is not a factor of interest rate in a lease arrangement, but the price in a lease arrangement is a factor of the cost of the asset. It determines how much your rentals will be, the type of asset you're leasing. For example, if you're leasing an IT equipment and a plant, even if you go for the same duration, you may not necessarily be charged the same amount of money. And this is because at the end of the lease term, what you may recover on an IT asset and a plant equipment may not be the same. In the case even of a motor vehicle, a vehicle used, for example, to and from work, and a vehicle used for commercial purposes like transportation it's not likely to have the same value at the end. And that is why when you talk to a leasing company and you ask them what interest rates do you charge, they will tell you we don't charge interest. The rental will be specific to what you use. So that's the key feature that you'll always notice on a lease arrangement, because in essence, you're being charged for the use, so the price will also reflect the kind of usage that you will be doing on the asset. So we can move forward. So for us who are familiar mainly with asset finance, I can just give a comparison between leasing and asset finance just for benefit. So I have given the two forms of leases and asset finance as we know it. For those who are not familiar with asset finance is primarily you going to a bank or any other financial institution, you take a loan and you tell them, I want to buy this specific equipment or this specific assets to be able to use for my business or for my personal use. So the key thing when it comes to asset finance, the legal ownership is not with the financial institution. The legal ownership is usually with the person buying, but in a lease arrangement, the legal ownership actually vests with the leasing company. So they're the ones who have the legal title. Then when it comes to asset finance, more often than not, institutions tend to lease assets that can be registered and those that have your number. So you'll tend to notice if you go to a bank to ask them, buy me furniture as part of my asset finance requirements for my business, they may not want to give you an asset finance arrangement. They're likely to tell you to take a loan in which you give security. Then the other thing that is also critical that I also mentioned, asset finance is an interest rate driven product because the bank will tell you we'll lend you at 20% or whatever the prevailing rate is. In leasing, we don't talk about interest rate, we talk about a rental that is specific. From a tax perspective, which is very important, I know right now that's a big topic right now in the Kenyan market. From an income tax benefit, when you take an asset on loan, for people who are in business, when you pay the interest to the bank, you can expense that interest for purposes of tax and also the wear and tear allowance. And what is clear is the wear and tear allowance that you expense for the use of the asset is actually dictated by KRA or the tax authority in whatever region you're coming from. But when it comes to leasing, the full lease rental that you're charged with will have insurance, it will have maintenance, all that is expense for purposes of tax. So you'll notice when it comes to leasing, it actually gives you a much better tax shield, because if you are paying, for example, 100,000 on a lease or 10,000 on a lease, and out of that maybe let's say in a case of 1,000 shillings being a lease rental and 200 or 300 is the interest, in the case of the loan, the 300 is what you'll expense for purposes of tax. In a lease, the entire 1,000 is what you'll expense for purposes of tax. So for business, that's a very efficient way of reducing your tax obligation because it is actually covered in the income tax rules in Kenya. For those who are under VAT, what you'll notice when you go to the bank and the asset has VAT, the interest you pay is actually based on the full amount inclusive of VAT. So essentially you're paying for interest on the VAT component as well. But when it comes to leasing, the VAT aspect is removed from the lease pricing. The reason being KRA treats leasing as a service, so VAT is only charged on the rental, and we don't charge a financing cost on the VAT because we only charge VAT on the rentals, as opposed to now charging a financing amount and then now we load VAT. So it basically saves you also from a cash flow perspective. And then when it comes to typical asset finance, if you want insurance, you're likely to be told to take insurance premium finance as a separate product from your asset finance loan. But when it comes to leasing, leasing can bundle all those things, so you pay one rental and you don't need to worry about any other aspect of your asset. So why would you go for leasing? What are some of the key benefits that you'll know? An easy way for us to be able to remember, we call it FAC, because number one, and we've arranged them, and we've used facts to be able to justify why leasing is a good benefit. From a cash flow management, leasing generally does not ask you for an equity contribution on when you make the request for you to be able to acquire the asset. You may be asked to make a rental deposit, which is a much lower amount than being asked to pay 20 or 30%. So from a cash flow management, it enables your business to preserve its working capital, to be able to run its operations. And then even if you have cash, you free up your cash as opposed to investing in that particular asset, and then you enter into a rental arrangement. One of the things I always encourage people who want to lease, always lease a productive asset so that even as you're producing and making money with the asset, you're able to generate rentals that make it easy for you to pay. The second thing we say about leasing, it gives you administrative convenience, because what happens is you enter into one master agreement. You enter into one master agreement that you can lease various assets. So today you can lease a computer, you can lease furniture, you can lease motor vehicles, you can lease plant and equipment under one agreement. And the reason why that is possible is when you sign that one major agreement, you enter into what you call lease schedule. So each lease schedule will say you have leased this specific asset for this period under this main agreement. So it becomes very easy. Then the other thing, as I mentioned, you can embed insurance and maintenance. So you don't need to worry, where will I get money for insurance? Where will I get money for maintenance? Where will I get money for software when I lease an asset? Because you're given an entire solution. From a tax benefit, as I mentioned, the two main benefits you get is from income tax, where the lease rentals, you deduct them against your revenue. And then for purposes of VAT, you can offset your input VAT. Input VAT is where you buy an asset, you pay for the VAT that is called input VAT. And where you invoice your customers and there's VAT, we call it output VAT. So for purposes of CRA, you're allowed to offset those. So people who are in manufacturing, people who are in industries that are heavy on VAT, leasing is a good way for you to reduce your VAT obligation because you're able to offset that. Then technology benefits, for those of us who are investing heavily in digital assets, leasing is a very good way to keep up to breast with current technology. And this is because you lease the asset, for example, for 3 years, and after every 3 years, you tell the leasing company, take this asset, I want a new set of assets, you enter into a new contract. When it comes to purchase, and one of the things you notice, and many of us can attest, you probably use your laptop until it completely dies. And that is how you know someone who has purchased an asset. For a car, you will use it until it smokes until it stalls for you to upgrade. Now, the benefit of leasing, you don't need to use the asset for its full economic useful life. You can actually upgrade it as you go along. And that also makes it easier for you to enjoy the asset during its best shelf life, and it gives you better value. From a financial benefit, though some of it has changed because of the accounting standards. One of the things we do, we don't ask you for any other tangible security. You're not necessarily given other covenants. For example, your business will run in this and this way. So that's another key benefit that your business does. So in essence, the lease asset is the main collateral that is used in that leasing arrangement. So you will not have the headache of looking for property or looking for any other thing outside the arrangement for you to be able to acquire that asset. And I know that's a challenge many of us encounter, where when you keep on being told you need to get collateral outside your business. And in my opinion, that's part of the reason why Kenya is not a productive country, because it's easier for you to get a loan to import finished goods than for you to get a loan actually to bring in machinery for you to undertake your own production. So I'll move on to the next slide. So who are some of the players in the leasing industry that you can engage? So today we have three main players in the leasing industry. One is bank-owned leasing companies, and some of them include NCBA Leasing, it's a bank. Then we have Corp Fleet Africa, it's also a bank-owned leasing company. Then we have independent leasing companies in the market. Some of us may have heard of Rentworks, they may have heard of Rentco, there's Avenue Leasing, and also Lemic, the company in which I represent. Then there are other leasing companies which are supplier-owned, so what we call them as captive leasing companies. Luxair is actually a company owned by Toyota, so today if you want to lease a new Toyota vehicle, they may be able to support you on that. At Telis Material Handling, they mainly deal with forklifts and warehouse equipment and a few others. So one of the things that, the reason why I'm sharing this particular information is today, if you want to invest in an asset and you've already engaged your supplier, ask them, do you have a leasing arrangement in your company? If they don't have, at least you know who are the other players who can be able to support you to be able to see how leasing will be able to work. I'll use just a minimum criteria that we normally consider on a leasing arrangement. This may be specific to LEMIC, but more often than not, you may see similarities with other leasing companies. So for us, as we mentioned, we deal mainly with registered businesses. And the reason why we deal with registered businesses as opposed to individuals, and because I know also the audience within Power Monday may have individuals, is primarily because leasing, there's no leasing law in Kenya. So today we more or less depend on the law of contract for us to be able to structure. As individuals, today you may work for company X, you may live in home A, and you leave. So it becomes harder for us to be able to track even the assets that we give you. So we prefer to deal with registered businesses where we are able to visit them on a regular basis. More often than not, because we have to be able to see if your business is generating revenue, you're likely to be asked for at least 12 months of operating history so that the leasing company is able to assess, are you generating cash to be able to pay? We said leasing is a cash flow driven solution as opposed to a collateral driven solution. So for instance, if your business is not generating cash flow and you come with property and say, I have a title in this very prominent area, it's highly unlikely for you to be supported on a lease arrangement because we do not focus on collateral, but the cash generative ability. The other thing, as I mentioned, we tend to focus more on productive assets because you want to ensure that the assets you're deploying in your business is able to generate revenue, that you can be able to support the rental payments and also create efficiency. And that's why we say, whether you own or lease the asset, you become neutral because in essence, the asset is still fulfilling the work it's supposed to do. Many of us may ask, how do we deal with imported equipment? So we deal with both local and importation. In the case of importations, we work with your supplier. We can use letters of credit through the bank to be able to bring in. The other thing that leasing companies do, and for us who don't know how maybe to check whether an asset is genuine or not, part of the due diligence we do as leasing companies is to be able to verify that the asset we give you is actually genuine. And this is in our interest primarily because remember, it is our primary security. So today, for example, if you want to lease a laptop, you may tell me the price and I'll tell you outrightly that is a refurbished machine. Why? We are able to know the general prices of assets in the market. Even through using their serial numbers, we can verify whether they're genuine or not. The duration on a lease will has to be between 12 months and above, as I mentioned to you. And where it's slightly longer, that will be handled on a case-to-case basis. For purposes of the proposal, what we know most leasing companies will ask you is the cost of the equipment, if you know it, if you have a quotation from your supplier. If you don't, you can give a general budget of how much the equipment costs, and then you state clearly what the use of the asset is. The reason why the use of the asset is important is it affects how the pricing will be. And more often than not, if you don't disclose the true use of the asset, there's a likelihood that you will also fall foul on the contract perspective because the contract is very clear on the use of the asset. Then the duration, of course, affects. So for example, if you lease an asset for 12 months, the rentals are likely to be higher than when you lease, for example, for 3 years. If you think about it from a simplistic perspective where you say, $1 million shillings divided over 12 months and factor in maybe some financial costs will be higher than if you divide it over 3 years. Then what is your intention at the end of the lease? So for instance, where you want ownership, the pricing will be very different than where you want to return the asset at the end. And with that, I have gotten to the end of my presentation. At least I've given us a brief overview of how leasing works. So maybe something that's not in the presentation that I can share. Today, you can lease any asset that you can think of. You can lease motor vehicles, you can lease machinery, you can lease IT equipment, you can lease furniture. So when you look at your business, ask yourself, what are these things that I can invest, I spend money to buy as capital assets or equipment in my business? All those can be leased. For people who are contractors, construction equipment can be leased. Farmers, tractors, the value production equipment, all that can be leased. So basically, leasing is a solution that can basically support you in any equipment investment that you have for your business, and it gives you much more advantages than actually the typical asset finance. And one of the reasons why leasing has not grown in Kenya, if I may admit, is because of lack of information. And we tend to leave your dreams for a forum like this for us to be able to share alternative solutions available in the market that you can be able to explore. So thank you so much, and I am happy to take any questions.
Yeah, thank you, Irene. Thank you. Leasing. Yeah, good. Now, there is one question. Please, that is from Brian, from Tino Brian. Please clarify the tax treatment again. The, he'd like to know, he'd like you to clarify that element of tax where you are saying there is some saving, there is some advantage. You can go back there.
Okay, thank you for
Mm.
that question. So, so how leasing saves you from a tax perspective? Leasing and like asset finance, leasing is not treated as a loan for purposes of KRA. Leasing is actually treated as a service that we give, because in essence, what the service that we give you is a right of use. So in Kenya today, everything related to income tax is actually under the Income Tax Act. So today, leasing falls under what you call income tax leasing rules, that is part of the Income Tax Act. So when we lease an asset to you, we don't tell you the interest rate. We tell you this is how much money you're supposed to pay. So in leasing, we call it a lease rental. Now the full lease rental, so for example, let's assume the asset is worth 100,000 shillings, and every month we tell you pay 1,000 shillings. Now for leasing, that 1,000 shillings, because it is treated as a service and you're using the asset, it's actually, you take that as a full expense. And now when you're reporting your income, remember when you're calculating your tax, as a business person, you normally take your income and you deduct your expenses, and then the profit you make is what now you pay tax again. So when it comes to the tax benefit in leasing, whatever your income is, you will remove your lease rental as an expense. Then the difference is what is going to pay for tax. So the comparison I use with loans is assuming the lease rental is 1,000 shillings, and in the loan scenario, the interest expense, let's say, is 300, and let's say depreciation is, let's say, for depreciation is 100. Okay. So what will happen in the case of the loan? You will expense 300 as interest, 100 being the wear and tear, for example, that is allowed. That is 400. But now in leasing, you will be allowed to expense 1,000. So you'll notice you have a bigger expense under leasing than in the loan, which means then it reduces the amount of tax you pay at the end. Is that clear?
Yeah, hopefully it is. If it's not, he will follow it up with another. There is a question from, okay, there is a comment from Rachel Maina saying, great presentation, Irene, always proud of you. There is a question from Liz Wenzao. Suppose I am in Airbnb business. Can I lease everything I need in the house?
For lease, yes, you can, because in essence, what will happen is the main things that you lease is what we call the fixed assets. So things like furniture, the fridges, those can be leased. What cannot be leased is likely to be things like cutlery and curtains, because those will essentially not be considered. Those will essentially not be considered fixed assets. But whichever leasing company you approach, different leasing companies have different risk aspects. So it's not all leasing companies who will lease everything, but most of what you see in an Airbnb, mainly the furniture and the electronics, those can be leased.
Great. Thank you, Liz. Kazi kwako. The other one, there is a comment from Lee Mwangi Kago. Kindly assist me with the contacts of the presenter. I'm interested in the service. Then he's given contact there. You can put your contact in the chat. and also we can share it later. And people who are in the Power Monday WhatsApp group, you will always get it there. There is a comment, or is it a question from Melvin? Nice presentation. So yeah, it's a question. So what is your interest rate, and what are your admin costs for a Kenya, for a 1 million loan, 1 million Kenya shillings loan over 12 months or 24 months or 36 months? How much is the monthly repayment, if you prefer that way? If you prefer that way of explaining to the clients.
Okay. Good question, and that's the reason why I retaliated twice. So, Melvin, for me to be able to answer that question, number one, I remember I mentioned there's no interest. So let me explain maybe the asset, the 1 million in the context of leasing. So assuming, Melvin, you have 1 million shillings, you want to buy a vehicle, and there's somebody else who has 1 million shillings, they want to buy IT equipment for their business. The reality, Melvin, the person using the vehicle and the person using the IT equipment, as much as it's the same value, we will not charge them the same. The reason why we will not charge them the same, remember I explained to you, leasing is about using the asset. The way the vehicle is used might not necessarily be the same way the IT equipment is used. And also from an IT perspective, at the end of the lease term, the IT equipment may not necessarily fetch the same amount of money. And that's why in leasing, we don't have a standard pricing that we can give you and dish out. We normally give a customized solution that is specific to what you're using, how long you want to use. In terms of admin costs, it may vary from one leasing company to the other. But one thing I can tell you, and if you have a specific need, I can compute for you. Today, leasing is not does not charge its price the rates that microfinance institutions charge. I know most of us, especially SMEs, we are familiar with the very high interest rate of between 4 to 10% per month. That's not how leasing is priced, because ideally what really drives the key component of that lease arrangement is the actual cost of the asset. So in this case, Melvin, I may not give you a specific rental because I don't know what asset you're dealing with. We'll have to get into specifics so that we are able to give you a specific pricing.
Yeah, thank you very much. Thank you very much for that. Then there is a question, I think, that was following up on that from Nora. Great presentation. Great session rather. My question is around maintenance of the equipment. Is it on the leaser or on the company?
Okay.
On the client.
So so there are two ways in which you can do it. It varies. There are two ways you can do maintenance. There are cases where you may opt for maintenance to be inbuilt in the contract. That is possible. When it's inbuilt in the contract, what normally happens, you will not feel the maintenance cost as the lessee, primarily because the amount is spread every month. Yeah, the amount is spread every month or whatever regular period it's done. But in a case where the maintenance cost makes the rental payment much higher because they still have to be priced back on the lease, sometimes we normally tell the client, you're free to arrange the maintenance outside. But what we normally do is ensure that you also get very good value in terms of ensuring that then you're not out of pocket throughout the month, but you only pay when the service is due. So it can be handled either case, but where it is a significant amount, for example, if you're leasing a truck, the maintenance over 5 years might be very significant. So it may significantly alter the rentals. So in that case, for example, you may be encouraged to pay for the maintenance as and when the vehicle is due for maintenance, as opposed to pricing it as part of the lease. So that's how it's usually treated. I can see some other questions. This one I can see, I think this one I'm seeing, can you? Okay. Maybe Peter, you can read for me. They seem to be scrolling a bit faster. We can.
Yes, they move pretty fast. There is a question from one of us from Live Your Dream. Thanks, Irene. This is definitely a disruptive, innovative, and better way of approaching access to finance. How does leasing turnaround time compare with asset financing?
Good question. TAT by day varies. The turnaround time will vary from one leasing company to the other. So maybe if I may disclose to you, Lemit has chosen a different model of appraising businesses compared to other leasing companies. Most leasing companies do what we call a leverage lease. So in a leverage lease, what they'll do is you will approach them for a lease arrangement. They will take your financials and take them to a bank for the bank to make a decision. For the bank-owned leasing companies, they're dictated by their own TAT. They take longer to make a decision. In our case, as Lemix, the model we've adopted, because we do the due diligence ourselves, we are able to actually give you feedback on whether you qualify for the lease or not within 2 working days. What may delay the process is you reviewing the lease agreement, because we allow you even to engage a lawyer if you choose. And then also, in a case where equipment has to be imported, that also affects TAT. So that means you may sign a contract today, it may take longer. I'll give a classic example. We leased equipment for somebody where we needed to import the equipment. We signed the contract in April. The equipment only got into the country in September. And that is mainly because we needed to do an importation, which means we had no control over the timeline. So that's the one thing you cannot control. But on average, most leasing companies will tell you it can range anything from a week to a month, depending on which leasing company you go to.
Great. Thank you very much. Thank you. Do I get, that is from Alexis, do I get to know the age of the equipment at the point of leasing? And can I eventually buy the leased equipment, say, after 2 years?
Okay, good question, Alexis. As I mentioned, Alexis, we tend to buy assets specific to your needs. Generally in leasing, we go for new equipment and we're able to verify. Even if you had approached a supplier and they gave you a quote, if you want us to verify on your behalf if the equipment is new, we tend to do so. So we generally go for new equipment. At Lemit, we don't lease motor vehicles, but I know other leasing companies that lease motor vehicles, they may go for used motor vehicles and they may work with either 5 to 6 years in terms of the age. So that information will be disclosed to you. For someone who wants ownership at the end of the lease, as I had mentioned, we have an arrangement called the lease to own, where you can be able to enter into that arrangement from the onset, or you may choose at the end of the lease to extend the lease from a leasing company, and we say, as opposed to me paying one-off, I can choose to extend the lease longer. And when you extend the lease for what we determine to be its full economic useful life, normally at that case, we say there's really no further value from this asset, and you may be able to retain it at what we call peppercorn, where there's a very small consideration you pay at the end.
Great. There seems to be just quite enough questions. I know we just handled enough of them.
I think I've
yes,
seen one.
somebody, Casey has asked, I know we have like 4 minutes to do this. Casey has asked, kindly clarify the difference between renting, hiring, and leasing. Thanks for the good presentation, learning a lot.
Okay. So renting is the same as leasing, but you'll hear rent being mentioned in the case of leasing or of property as well. But in equipment, more often than not, we talk about leasing. Hiring, more often than not, a hire tends to be short-term in nature, less than 12 months. A lease, more often than not, is more than 12 months. But a rent and a lease are always used interchangeably. But rent, you'll see rent more common in property than in leasing. But in leasing, we don't talk about hiring, we talk about leasing. You may have heard of hire purchase. That is a separate arrangement which banks and other non-bank institutions enter into, and it's governed by the Hire Purchase Act in Kenya. But for leasing, we are not under that arrangement.
Great. So the other question from Rachel is, do you lease CapEx kind of assets and equipment? That's from Rachel.
Okay. So CapEx, in leasing, what we call CapEx is essentially capital expenditure. So capital expenditure can either be building or property, or it can be equipment. So we don't deal with Most leasing companies, as per this presentation, they don't deal with property, but I know the institutions that actually lease property, but that can be leased as well, but not under equipment leasing. And then for equipment, that is done now under what I have presented today.
Great. Then there is a comment from Masedi. Thanks so much for this presentation, an eye-opener on leasing equipment. I'm in food manufacturing industry. I hope we can fit in the arrangement. Purchasing those equipment can be very expensive. Maybe the last question or set of questions, it's from Liz. Yeah, Louis Muiruri says, great presentation, Irene. So Liz asks, does the lessee hold any liability in terms of insurance? Number two, does your company help import for PWD's equipment? I believe so. Yeah.
Thank you,
People with
Liz, for that
disabilities.
question. So when it comes
Yes.
to insurance, so when it comes to insurance of leased assets, we incorporate insurance in the lease. Where the lessee may be held liable is where you are negligent in the use of the asset. So for example, assuming you are using an asset, let's use in the case of a motor vehicle. The motor vehicle has insurance, and then you do not, for example, let me use a very a weird example. Let's say, for example, someone below 18 years drives the car, it causes an accident, people are injured and all that. In that case, as much as there is insurance that will cater for that, the lessee may be held liable because remember, you violated the terms of the insurance arrangement. So normally what we usually tell the lessee, assuming there's an accidental damage to the asset that the lessee has, inform the leasing company and do not attempt to, for example, repair or anything. Always inform the leasing company so that we can work closely with the insurance company. But where negligence is proven on your end, you may be held liable and you may be asked to pay. And even in cases where, for example, you lease assets and they're used by your staff, for example, laptops, if your staff are negligent, you will be surcharged the excess because the insurance company also charge excess when they're paying the claim. We will surcharge that back to you because, of course, it's just for purposes of ensuring you're monitoring the use. Then in the case of people with disabilities, maybe what I can clarify is we only import where we enter into a lease arrangement. And I know the challenge with people with disabilities, you get certain tax benefits that cannot be passed on to the leasing company. So currently, I know one of the things that we are doing as a leasing association is lobbying the government so that if our lessee is exempted from certain taxes or duties, then they should be passed on to us automatically because the user has those benefits. So currently, I know the challenge with people with disabilities, the reason why it may be harder to enter into a lease arrangement because the duty benefits are not passed on to the leasing company, and we cannot surcharge you for that because it's already expense. So it basically means it's just something that we are trying to lobby the government to ensure that we are also able to get those exemptions that may then benefit people with disabilities as well when it comes to using leasing as a means to acquire assets.
Thank you very much. We've got to bring it to a close. At this moment in time, I'll call Antonia to give a vote of thanks. Official vote of thanks from Power Monday Fraternity, and then we'll. Antonia, you can also make announcements if there are any you have, and then we move on. Yeah, you can now bring down the presentation.
Good morning, everybody, and thank you for joining Power Monday this morning. We are grateful that you made it today. I know you are more than 50, and that is a good number to wake up and log into this great presentation. Thank you, Irene, for such a great presentation. I'm sure that we will look for you again because I feel like there is still more information, and for us who are getting this information even for the first time, we would like to know more. Thank you so much for enlightening us this wonderful morning. and for giving us an opportunity even to grow in our businesses, because this is definitely the way to go. Thank you, our Power Monday board, for making this happen, for always getting us great speakers and making sure that we are powered every other Monday. Thank you for everyone who has been interactive, everyone who has asked a question. We are grateful and thank you for your great participation. We're looking forward to hosting you again next Monday. Asanteni sana. For the part of our announcements, we have the upcoming meet and greet, which will be on the 26th of July. And we are already doing registration. And this one will be a special one because we'll do it together with a charity activity. So let's give and give extra, because it's from our givings that we'll be able to fund the charity activity. And after I trust the timings will be announced, and we've already talked to our host, who is JJ McCarthy. The same place we went last time, we still be hosted there. So let us start registering mapema so that we can secure the place in good time. It's already secured, but they need to know the numbers and all that. So once you're given the timelines, let's do the needful as a team. Asanteni sana, and let's have a great week. I know it's a week which has a lot of activities. It's a very busy week. Let's participate. If you cannot go on the streets, use the pay bill. It's provided. And if you cannot make noise, make sure that your handles are active enough. Asanteni sana, and have a great day.
Okay. Did you tell people the date? And have you shared the what do we call it? Flyer. Did you share it in the group? I doubt.
No, I haven't shared yet because I had talked to Dominic and he referred me to sister. So once I communicate with the sister, I'll share the flyer.
Okay.
I just
Okay.
need to
Great.
confirm something today.
Okay. Good. Thank you very much. Now, as I had said, I see Zena is asking about Power Monday WhatsApp group. We said for you to join to be added to the group, there is a form that you need to fill in, and it's on that particular page I put there, Power Monday, liveyourdream.co.ke/Power Monday. We also have this recording, all of them in YouTube. Just go to youtube.com/@Power Monday.